Hello everyone, how are you? Dollar Currency 21 is here again. We want to talk about the patterns and how to make money with the patterns, okay? This is our Twitter account. Go and follow us. You can find a lot of educational posts on our Twitter. Okay, let's jump and talk about the patterns. There is a book about the patterns. The name of the book is Encyclopedia of Chart Patterns. Yeah, and this book has more than 1000 pages talking about the patterns and this kind of stuff. Okay, we're not going to talk about this. Just go and search chart pattern on the Google, the cheat sheet for chart pattern on the Google, and you will see a lot of these kind of things. Beautiful cheat sheets on the Google. Okay, so basically we have two types of patterns. The first column at the left side of your screen is reversal patterns. For example, after a downtrend, you will see this kind of patterns. You will expect an uptrend, or after an uptrend, you will see this kind of reversal pattern. You will expect the downtrend. Okay. The next one is the continuational patterns, which means you are already in an uptrend. You will see a continuation pattern. You expect continue the uptrend, or you are in a downtrend, okay, and you will counter with this kind of continuational pattern. You will expect continue to the downward side, okay. So we will talk about them one by one. The first one is a double top and double bottom pattern. As you can see here, they are reversal pattern. In a double bottom pattern, this is the neckline. This line here is the neckline, which will be your entry point. The moment that price breaks the entry point to the upside, it's your entry point. Your stop loss will be below the previous low, and this distance here is equal to this distance. Okay, from the low to the neckline is equal to the neckline and the TP. So this is the double bottom pattern. The double top pattern is completely opposite. So you will a pattern like this. This is the neckline. The moment that price breaks the neckline downward, okay, you will enter on a market and stop loss is above the previous high. And this distance between this high to the neckline is equal to the neckline to the TP. Okay, I'm going to show you beautiful double top pattern. This is the daily Bitcoin chart. Okay, as you can see, this is a double top pattern. Yeah, this is a neckline. Okay, but we're not gonna use this kind of patterns to trade. Okay, this is the basic TA and you need to learn it. Okay, you need to learn it, because if you don't, for example, imagine price is here. Okay, let me cut the price from here. Okay, imagine the price is here and you are printing the candles like this. Okay, in this situation, for example, a random guy on Twitter, YouTube tells you that this is a double top pattern. Yeah, do you accept that? I'm guaranteed that you will want to fight with this kind of pattern, because here everyone on Twitter and YouTube are bullish. I exactly remember this this date here. Okay, the moon boys and the influencers draw their trend line and they said that this is our support. Yeah, and we will just, this is just a simple test. We will see some pattern like this and we will go and test $100,000 for Bitcoin price. Yeah, so what would you do? It's pretty hard. I remember only 3 influencers said and talked about this double top pattern in that day. Okay, so it's very hard. It's very hard for a trader to be neutral and see what will happen in actual market. Okay, so just know that being a neutral is completely hard in this market. So this is one of the patterns we talked about. The next pattern we want to talk about is triple bottom or triple top. It's pretty simple to the double top and double bottom patterns. We're not gonna waste our time for this. It's completely the same. It's happening very rare, so just don't waste your time. This is your entry. You can, the moment that price breaks it to the upward, okay, you can enter stop loss below the previous low and this kind of stuff. It's repeating the previous patterns, okay? Don't waste your time. The next pattern, which is very important, is head and shoulder or inverted head and shoulder. The inverted head and shoulder is a bullish pattern, okay? This is the neckline, yeah? The moment that price breaks the neckline to the upside, you want to enter in the market, your stop loss will below the previous low or left shoulder, okay? And the distance between head and neckline is equal to the neckline and your TP, okay? This is the left shoulder, this is the head, this is the right shoulder, okay? So the moment that price breaks the neckline, you enter in the market, stop loss below the right shoulder, and your TP, this distance is equal to this distance. So your TP is already known, yeah? On a head and shoulder pattern, this is the left shoulder, this is the head, this is the right shoulder. This is the neckline. The moment that price breaks the neckline to the downside, you want to enter in a market. Your stop loss is above the previous high, which will be the right shoulder, okay? And the distance between head and neckline is equal to the neckline and your TP, okay? The important point on head and shoulder is you want to see high volume on the right shoulder compared to the head and left shoulder. On the right shoulder, you need more volume. If you see more volume on right shoulder, okay, right shoulder, it's more valid. This pattern will be more valid for you. I'm going to show you a beautiful head and shoulder pattern here. This is the Bitcoin chart on the daily time frame. Okay, so as you can see, this is the left shoulder, head, right shoulder. This is your neckline. Yeah. Another one, some of the traders say that, wow, Bitcoin currently are in a big head and shoulder pattern. This is the left shoulder, head, right shoulder, neckline, go down. Yeah? So another head and shoulder pattern is in Ethereum chart. Ethereum USDT, for example, let us jump into the KuCoin, clear everything. Okay. And as you can see, here is the left shoulder, head, right shoulder, neckline, downward. Yeah? And we had a beautiful tweet about that here. And you see the date, the 7th of April of 2022 here. We said that, guys, this is a head and shoulder pattern. The price of Ethereum was 3,200. Yeah? Here, in this situation, it's pretty impossible for you to be neutral and say, yeah, this is a head and shoulder pattern. Yeah? 99% of the followers was against my opinion. They said, no, the Ethereum price will go up and we will test the $6,000 again. Okay? So for you, it's really hard to be neutral in this market. The next pattern will be falling wedge and rising wedge pattern. Okay? Falling wedge pattern, rising wedge pattern. This is the resistance line. The moment that price breaks this resistance lines to the upside, you will enter the market, stop loss below the previous low and opposite on the rising wedge patterns. This is not gonna useful, these kind of patterns sometimes work, but the other times doesn't work. Okay, so basically you have to learn it, but know that we don't want to trade based on them. This is the basic things which we talked in the first episode of our course. Okay, if you remember, I told you that this is our resistance line, the price making a lower high and lower low, lower high and the lower low. When the price breaks this resistance lines to the upward, you want to buy 50% of your position, and on the retest you want to buy another 50% of your position, and your stop loss is below the previous low. Yeah, so there is no point to memorize this kind of patterns when you can use those higher high, higher lows and trend lines. Yeah, So don't waste your time on this one. The next one is the continuation patterns. This is the ascending triangle. When you are in an uptrend, you see this continuational triangle, you expect an uptrend. The moment that price breaks this top line, which will be a resistance, you will enter in the market stop loss below the previous low and your TP. This is the bar of this flag, okay? And this distance here is equal to this distance, okay? This is the same thing which we talked on the first episode of this TA course. Higher high, higher lows. When we broke the resistance or support to the upward or downside, you want to enter in a market, okay? Sometimes they are working these patterns and most of the times they're not going to work. So don't waste your time. Another one is bullish wedge and bearish wedge. So this is our continuational patterns. 50% of the time they're gonna work. The half of the times they're not gonna work. So don't waste your time. Just know that when price breaks this resistance to the upside, you will enter in the market, stop loss below the previous low, and this distance will equal to this distance. Yeah. So and the opposite side. This distance here is equal to this distance the moment that price breaks this support to the downside. You want to enter in the market, stop loss above the previous high. This distance is equal to this distance, okay? Sometimes they're gonna work, sometimes not gonna work. Another one is bullish flag and bearish flag. This is one of the important, one of the most important patterns. You will see it a lot. This is continuational. We are in an uptrend. You will see this flag. You will continue the uptrend. And this distance here, as a bar of this flag, is equal to this distance. Okay. Bearish flag, you will see some patterns like this. Yeah. The moment that we break the downside of this flag, you want to enter in the market, your stop loss is above the previous high, and this distance is equal to this distance. Okay, this is a bearish flag. So I'm gonna show you a beautiful bearish flag on the chart. Okay, this is one of the most important patterns on the Bitcoin chart. As you can see, if I connected these two lows, and you can find your flag like this. Okay, as you can see, the price move down from here. We touch the flag, okay, like this. Okay, the moment that price breaks down, it goes down like this. Okay, and as you can see, this distance here, from here, for example, this distance from here to here. Okay, let me increase the thickness. Yeah, this distance is equal to this distance. Yeah, approximately is equal to this distance. Yeah, and after that, and as you can see, we just printing the flags. Okay, we just printing the flags. Let me find it here. Okay, you can find, you can say that this is approximately another bearish flag here. Okay, we have another flag. We had another flag here. This was another flag here. Yeah, we broke it. We broke it. Yeah, pretty simple. We broke it downward. We broke the flag downward. We test it, kiss it, and we're now going down again. Yeah, so it's a flag. I remember that one of the influencers on the Twitter in one of the shows said that this is another flag, in my opinion, this one. What the difference between this flag and those flag is, I'm gonna show you a beautiful one. Okay, there's a difference between these two type of flags. Okay, in this one, in this flag, you're just making, in this flag, you're just making lower low, lower high, lower low, lower high, lower low, and the price will break it to upside. Okay, but in those flags here, which is a bearish one, you're just making higher low, higher high, higher low, higher high. And when all the traders are hoping for a bullish momentum, it breaks it down and you will continue the downtrend. So after the flags, we have a bullish symmetrical triangle and bearish symmetrical triangle. when you are on uptrend, you see a pattern like this one, you will wait for the price to break this resistance upward. Your stop loss will be on the previous low. This distance here is equal to this distance, okay? And the opposite will be on the very symmetrical triangle. This is not very important because sometimes it's gonna work, other times not gonna work, so don't waste your time on that. We will talk about the next pattern, which is a cup and handle pattern. So this is a cup and handle pattern, okay? As you can see, we have a cup, okay? This is a handle, and the moment that price breaks the handle to the upside, you want to enter in the market, and usually the distance from the bottom of the cup to the neckline, which is this resistance line, is equal from the distance from the handle to the upside, okay? I'm gonna show you a beautiful one on the MEXC chart. Let me jump into the daily time frame, okay? And for example, here, as you can see, let me clean the chart for yourself. Yeah. Here, as you can see, we have a cup, we have a handle. This is a neckline. This distance here from here to here is equal to distance from handle to the and as you can see, we had a beautiful tweet about this cup and handle pattern on the MEXC chart, which is a dollar index, okay? And we expected an uptrend continuation to the upside, okay? As you can see, it goes up after that, okay? At the continuation to the upside, we check that upside, okay? The final pattern is Adam and Eve, okay? This is an Adam and this is an Eve, and we expect a continuation to the upside after this reversal pattern. So Adam and Eve is another pattern. It's happening very rare in the market, but you have to know that as a technical analyzer, okay? I hope you enjoyed this session. We will see you in the next session.
I'm walking alone, the streets are empty. The only thing I can see is my own silhouette.